Welcome to Trading with Venus podcast, episode 60. I am your host, Raman Gill. Today, it's my pleasure to welcome our special guest to the show, Navin Prithyani. Navin is the founder and mentor at Urban Forex. Navin has been trading Forex for well over a decade. During this time, he has gone through all the phases of becoming a successful trader and through all the hardships to reach the next phase. Navin has had several mentors and has been able to condense the best of their knowledge into his own and made it even better. These days, Navin is giving back to the trading community by teaching his knowledge to both new and experienced traders. During this process, he has also discovered that he has a talent for teaching. Navin, thank you so much for joining us today.
My pleasure. Thanks for having me.
So to kick things off, let's get started with a bit about yourself. We would love to get to know you personally.
Okay. Well, personally, I'm an Indian guy. Come as cliche as it is, I'm brown skinned and black hair. Looking at it on the professional side, I'm, of course, Navin Prithyani. I am senior trader at forexwatchers.com and the head mentor at urbanforex.com. If you're, wondering the personal journey to that, is that what you're asking?
Yes. So how did you get in trading?
Well, it started when I was actually in high school. This was maybe almost 15, 20 years ago. I was in high school and I was basically outside in the park. It was after school hours and I was just playing around and playing soccer with my friends. And as the football basically goes into the classroom, I see my teacher just sitting there with his laptop and he was doing options trading at that time. And I was just looking at him like, what are you doing? And he was like, well, I'm just working. And my first question was, don't you need to go to an office to work? Because that's what my dad does. And he was like, no, as long as I have my laptop and I have internet, I'm good to go. And that's where my fascination with working online began. But at that stage, I wasn't still, thrown into the trading world. It wasn't until, I started going into anything online until my dad had this conversation with me telling me like, Navin, if you're going to do something, you want to do it big because everything takes time to master and learn. And if it is going to take time, might as well don't waste time with the little things. And then at that time, Forex was the biggest thing out there. So I went in and started my journey with Forex and that's where I still stand today.
Actually, that's a great way to look at it, to go into it big. That's interesting. Right. I actually started with options trading as well, and it just wasn't, options trading wasn't for me, but I found Forex more interesting than options. Options felt like it took forever for something to happen.
Right.
So while you were trading in the initial years, was there a time when you actually felt like you had failed at trading, that you had hit some major obstacles? So tell us, how did you get through that?
Okay, well, I was lucky, I would say, because it wasn't just one time or two times. There was several times where I felt like throwing in the towel and saying, okay, this is not for me. I quit or I give up. This is, it's just not working. At that time, being in school, just going into college, funds are very, very limited to me as is. So learning trading, anything I would learn, I would try, I would fail, I would lose the money because I would always try live. I'd be like, what's the point of going demo? That was my concept back in the day. So I'd go live, lose a lot of money, try again, learn a new technique or a new strategy, kept hopping around strategies looking for, the holy grail. So basically going through the same cycle an average trader goes through is looking for the answer. It wasn't until during the middle years of my college when things started to work out, my trading became a little bit more stabilized, where I actually dropped out of university and I said, okay, I'm going to actually do this full time. I think I got this. When I dropped out, I knew that I couldn't. I was just in the US. I was still living in the States at that time. I dropped out and I was like, well, I can't sustain my lifestyle in the US. I'm going to have to move from here. So I relocated to India, where the lifestyle was a lot cheaper for me to pursue this dream. And knowing that things are already working, I think I got a good grip on this. Unfortunately, your first month of winnings do not result into the future winnings. And I realized that the hard way. After a series of months of losses following that, it's like, oh my God, I don't think I can keep up with this. I might have to quit because otherwise I'm just going to go bankrupt. There's no way. But it was just something in me that I just never gave up and I just kept persisting through, just getting through it. I would still work in the daytime, but in the night I'd come back and get back into trading. So it was this relentless of never-ending pursuit where even though I wanted to give up, the next day I'd just get back up, try again, get back up, try again, while still keeping an open mind of what if I'm doing it all wrong? So that was, I guess, my turning point of that persistence of just keep at it, it'll make sense.
Actually, a couple of follow-up questions from there. I find in our business here, there's so much hype out there, and I talk to a lot of people who just want to become successful right away. right? So somebody who has started trading, say a month ago or a couple months ago, and now they want, within a few months, they want to replace their full-time income from their job by trading. So what do you say to people like that? I mean, I have my own analogies that I give, but do you have any advice for people who are just starting out and wanting to pursue this, do it on a consistent basis?
Yeah, absolutely. It's as simple as this. If you really look at some professional traders, they really make a lot of money. Now, we're talking about money more than pilots, doctors, lawyers, all of them even combined. Now, these pilots, doctors, and engineers, and all these people that you can look at professionally, they go to school for around 8 years to specialize. And if we can't even put in the work to do it well for 1 or 2 years or 3 years, and we're just trying to turn it around in a month time or a week time, you probably won't make as much money. Maybe you might get a little bit profitable, but you won't make as much money to replace anything that currently might be having. So I would say it's a failed dream. I hope I'm not crushing dreams by saying that, because it is worth it being in it, but it does take time, in my personal opinion. It does take time, and you got to put in the effort. And just like the university kids do, they put in the effort to become the doctor or the engineer or the lawyer. You got to do the same with trading. It takes time.
I absolutely agree. Another question, if somebody is starting out with a small account, what advice do you have for somebody
$1 a month
like that?
Keep your leverage very low initially. You don't want to go in full speed and trading large lot sizes, because a small account, the word small is very relative to what the person's lifestyle is. So let's say a person, has a normal lifestyle where he has a salary of $2,000 a month, his rent is $750 or $1,000 a month, and with the remaining $1,000, he has some expenses to pay and bills to pay. Now, if his account is, let's say, $500, that would be considered small. There might be a little pressure to make that $500 as close to the $2,000 as possible, because there's a reference point of what you're doing on a day-to-day basis. That reference point is going to be, well, I earned $2,000. Can I do that here? That's generally where the reference point comes in, and that's when people start pushing their account and saying, how fast can I push this? How hard can I push this? And with over-leveraging and everything, that thing is a ticking time bomb. 3 good trades, and then the 4th trade with higher leverage will wipe it all out. So you got to be very stable and consistent and look at it in terms of percentage of your account rather than referring it to your lifestyle and trying to make that money based on your lifestyle.
Yeah, that's what I find. I think we come from our occupational side. We take a look at what kind of money we are making from our job, and we try to transition that to our trading, but not thinking the amount of time we have put into that profession.
Exactly. That's absolutely correct.
To go back to your trading journey, what was your biggest challenge that you found to getting consistently profitable, and how did you overcome that challenge?
Oh, it wasn't until I went through a series of mentors. I had several mentors throughout my life. Most of them obviously bogus mentors. There's a dime a dozen on the internet. But I went through my fair share of looking for, come on, there must be someone out there who's really trading. Then I approached a couple mentors and a series of mentors until my last 2 mentors, where they pointed me in the right. They're underground now. They're not public. They're not teaching or anything like that. They were able to show me that, Navin, you have a lot of knowledge behind your back. You've been in the industry for so long. You're up to date with what's happening. But that's not how trading works. In trading, you're working with human psychology and illusion. And I didn't understand what that meant until I can verbally I give you an idea of what this means. It's similar to what's happening with Bitcoin, I would say, or any cryptocurrencies. Every wave in the market begins like this, where it starts off slow, all the big shots get in, then it picks up a little bit steam and gets a little bit more traction. It's visible to the average person, but they don't do anything about it because they don't know anything about it. And then it picks up even more traction, where it gets on the headlines, the news, every person's talking about it, your neighbor, your dog, your cat, everyone's looking at it. Then suddenly you feel, I need to get in on this also. That's what happened. Every time I looked at my charts, I was looking at it like, oh, I will buy because it's an uptrend. I will sell because it's a downtrend. But I needed it to be clear that it's a downtrend for me to sell, or a clear uptrend for me to buy. And I started to realize after a long time that doing it this way, I was simply chasing the market. I was always the last player getting in. And once that was pointed out to me, it was very evident of how the market works on a 95%, 5% principle. Because at any given point, there's always a buyer and a seller in the market. So how in the world do you get a 95% odd where most will lose? How is that even possible if everyone is buying and selling at the same time? It wasn't until it's just evident that most people get involved when it's actually clear in front of their eyes that, oh, it looks like it's a buy, so it must be a buy going forward. So the visual design is always an illusion of what we see. We have to anticipate the market and not participate, basically.
So how do you do that differently today?
Well, now it's almost like I understand the concept of the trend is your friend, but I'm always counter trend trading. I'm always trading against trend. It just sounds like when the markets are going down, I'm preparing to buy. Because as the market goes down, it means more and more people are willing to sell it, right? As more and more people are willing to sell it at a lower and a lower and a lower price, I'm trying to time it at what point is the selling going to slow down for me to buy it, okay? And when I buy it at that low point there, I'm not interested in if the rest of the world is buying it, because they will eventually buy it as the market starts to rise, then the hype switches over to the buy side. But I'm looking to exit at that point when the hype jumps in, okay? Because I have to offload my buy by doing a sell, and if I'm hitting the sell button, someone on the other end has to buy it. So having a majority on the buying side at that point is good. I'm not sure if that was clear enough, but
a lot of my own trading, I am a counter trend trader, or I consider myself a counter trend trader, and I kind of agree with I agree with you. Now, in your trading journey, while you were developing your trading or developing as a trader, was there a point where you had an aha moment where things kind of fell into place for you?
I would basically say it was that moment. It was just I was looking at the markets all wrong. It was because I was always entering the market when it was too obvious, and because it was too obvious, in the past I was doing indicators and systems and EAs and all that stuff, but they all followed price. And then the next phase in my life came where I got rid of indicators and systems, and I became the indicator because I started following price, and I thought, oh, look, statistically, me, I'm a price action trader. But I was still following price. I was still one step behind, and I didn't realize that that was still the wrong move to do. The word price action trader is still incorrect. Doesn't mean you're still doing the market trading correctly. There is still more to it. And once you understand this concept of you got to be careful not to chase the market, and you want to do your best to call the turns statistically well as possible, then you have this advantage over the average. Because while the average market is selling, you hit the buys. While the average market is buying, you're hitting the sells. You have this unfair advantage, which is unseen on a chart.
In terms of habits, so we talked about how it takes some time for a person to develop as a trader. Did you find that there was a habit that you found really contributed to your trading success?
Oh, yes, my post-analysis. In my initial years, I was all about, I tried this trade, oh, it didn't work, okay, let me try the next trade. Oh, it didn't work, okay, looks like this strategy is not working, let's hop on to the next trade. Okay, that didn't work. Like, I was this constant guy who would hop around and everything. It wasn't where I, given a few years into the career, where I started realizing, how important post-analysis is where after each trade, you sit down and you figure out, well, what happened? Why was this wrong? What could have been done better? And does this pan out if I were to test this? It was only after that self-realization moments where I started realizing that I can be better if I just focus on where the mistakes are actually happening. And you'd be surprised, a lot of times I realized maybe 40% of my errors were actually even coming from psychology rather than the system itself or technique itself that I was doing.
That is so true. So if you look at any kind of professional sports, we see that they always watch the tapes after. They spend so much time watching the tape and doing the post-analysis of the game instead of just focusing on what's going on the field. And it's interesting that we do that a lot of traders. That's not what we focus on. We're focusing so much on the technical side of it, where to pull the trigger, where to get out, whereas we're not really paying attention to what happened on the field while we were trading.
Absolutely.
So that's great, actually. That's perfect. Now, in terms of resources, was there a particular book or a resource that you found particularly helpful?
I liked Gary Dayton's book, Dr. Gary Dayton, for Trade Mindfully. That one was a very nice book for me. It almost felt like he was talking to me. Been in touch with him. I think we're going to be working together in the near future as well for some of the traders that we have in-house. So we might be working with him soon. See if we can bring him on board and work with some of our students, some of our traders that we have in-house as well. His material really helped me, I would say. It was a good guidance. That's Trade Mindfully. That's the name of the book. Sorry.
Trade Mindfully. Perfect.
Correct.
Are there any particular learnings that you would like to share from that book or what you learned from there?
Yeah, sure. So there's a common thing that I would have a problem with sometimes called recency, which is evident. It's like no two trades are the same, but because we're involved psychologically, if we take a trade and we do it well, but then, let's say we exit the trade prematurely, and then later we realize, oh, the trade went on for so much further, but according to your rules, you're supposed to exit where you did. But on the following trade, whenever I see that same setup happening again, I would actually hold on to it longer in that relevance of the previous trade, like, oh, remember that last trade? What if I hold on to this longer again? And then this trade ends up not performing because I'm holding on too long. So recency is a a thing that I found was very important, that you got to treat each trade as if it's a standalone thing. It's not, it won't replay it over and over again.
That's very true. I think recency bias is probably one of the biggest challenges that I found most traders have.
Right.
We focus so much on what happened just like the last time as opposed to what happened the week before or the month before. Messes everybody up, I think.
Yeah, absolutely. It's what's a lot of a lot of students who are coming to me, they're talking about, all these cryptocurrencies because they're using recency as, well, last week I made money, so that it means I'm going to keep making money if I keep buying the thing, So there's a lot of recency involved in a lot of stuff that's happening in the market right now as well.
That's very true. And I think particularly with cryptocurrencies, just because a market has it's kind of gone one way, it hasn't really dropped really. It's just gone upwards. People have, or what I have heard of talking to people seem to have forgotten that there are two sides of the market. There's always buying and selling.
Absolutely.
So I do hear, even from people that I find haven't traded for very long or haven't traded any other instrument, I will get comments from them saying, oh, the market is just comments that you can tell that somebody is just really brand new and then they're just kind of jumping on the hype and not really understanding that what goes up must come down at some point.
It's actually scary. Like the amount of the more people jumping in on this is incredibly scary.
If you could do your trading journey all over again, knowing all that you know now, what would you do differently?
I would have moved to Bangkok a long time ago. I love the time zone here. In the U.S., I had to wake up 3 o'clock in the morning, trade London sometimes. This is while still being in university and all that stuff. I would have dropped out of my university a long ago. I was in university for 7 years, just dragging along. So I would have dropped out a long time ago. I felt, for me personally, going to college and university was an absolute waste of time and resources, because even the jobs I took after the university was simply, I don't care what you know, sit down, we're going to train you our way. Well, what's the point of me going to college then if you're going to train me anyway? So I saw this a lot all across the U.S. And so it's like going to college actually has no meaning. Again, this is my personal journey. I don't want people to listen to this podcast and be like, you know what, screw school, I'm quitting, But it's a personal experience and journey I had. So I would have done that. I would have traded a lot bigger, a lot sooner, rather than waiting for the right moment and feeling comfortable and then raising my lot sizes and my trade sizes. I would have traded a lot bigger, a lot sooner. So
actually, that's an important point, because I feel in terms of when we were just talking about people trading small sizes, small account sizes, and one thing I try to tell people is that trading is kind of like it is running a business. It is your business. And just like when we start any business, we don't go into the business with no money in at all. Like you want to test things out in the market, so start with a small size, play around with the account, and try to get consistent with it. So instead of trying to make a lot of profits from a small account, go for consistency and then scale up from there.
Exactly.
So like put in more money once you're consistent, but people kind of forget that part of it because they're always trying to make money from the small account, but that's not where we're making the money. That's our training wheels. But the money really comes from scaling in once you're comfortable. Because if you can take $1 and turn it into $2, why wouldn't you? Why wouldn't you put more money behind that? Right. So that's very interesting. Going to your point of actually going bigger once you sort of figure things out. So very true.
I took a long time to go bigger. Basically, I was shocked from all the losses from in the past. That's what held me back from going bigger at an early stage.
I think that's a common problem too. Like we all go through that, where I think we start off big and then we scale down. Whereas I think what we need to do is start small and then scale up once we are comfortable, right? But it's human nature to do it kind of the other way around. We go in with big dollar signs in our eyes and blow our account.
It's what could be better than a college student just trading from his little dorm room and be like, oh my god, I can be the richest guy on campus. But unfortunately, that's not the case. It doesn't work like that.
Kind of a lure to that, isn't there?
There is, and that's what attracts a lot of people into this industry. Unfortunately, that's how almost everyone starts in this industry. For that, they watch the video on YouTube somewhere and they're like, I too can get a Ferrari or a boat that they're showing in the background. So it's just a very wrong way to get people into this industry, and the risks are extremely high. The journey takes time, and there's a lot of information that needs to be learned the right way. There's so much bad information information out there. Extremely, there's tons of bad information out there.
That's very true. Navin, if somebody wanted to get in touch with you, what's the best way to reach you?
Well, my email address is navin@urbanforex.com, and my websites are urbanforex.com. That would be the absolute fastest way if you're interested in looking at some of my stuff or what I have to say. My YouTube channel, also Urban Forex. These would be the best.
Great. Thank you so much for that, Navin. Thank you for sharing your insights with us and your trading journey with us.
Yeah, no problem.
We were just talking to Navin Prithyani, who shared his trading journey with us. Hope you were able to gain some valuable insights from his interview and are able to apply some of these to your own trading. For show notes for this episode, please visit tradingwithvenus.com/podcast page and look for episode 60. That's it for now. Hope you have a wonderful trading week, and I will see you next time.